welcome to Power Breakfast, powered by Investonomics. Joining us today is a very special guest, Mr. V.R. Sharma, Managing Director, Jindal Steel and Power Limited. Thank you very much, sir, for joining in. For the world economy, financial year 2020-21 remains one best forgotten. However, that's not the case with domestic private sector steel maker, especially JSPL, which is up 700% since 2020. And the man behind the recent success of JSPL is none other than Mr. Sharma. Mr. Sharma, the previous quarter showed a very strong recovery for the entire steel industry in India, with both utilization levels and domestic demand rising month on month. Does that still stand true? We are standing just ahead of the next quarter earnings. Can we expect another bumper quarter from you?
Yes, thank you very much. Yes, you are right. Last year was very good for us. It was very hilarious. And, we could do the ever highest EBITDA during the pandemic time when April, May, June was the lockdown period, same last year. So our stock on 2nd of April, I think it was 63 rupees. And today in April, this is about 450, 455 rupees per share. So the street has given a very positive response. We did our highest EBITDA and our highest sales and production in April, May, June, when the whole world was struggling. So we were exporting to the rest of the world. And so was the quarter two, that is July, August, September. Again, we broke our records of quarter one. Then quarter three, again, a record broken quarter three. And I'm sure the results are going to be declared very, very soon for quarter four. This will be definitely more than quarter three. Now, as far as quarter one is concerned, for this year, again, the country has been passing through a very, very severe tsunami kind of wave, that is COVID wave. We do not know what is going to happen, but order book is excellent. Domestic market is very good. Most of the state governments, they are not stopping their industrial houses. And if this continues, then I think quarter one of this year will also be much better. So this is how we are done. And I'm sure this rally will be maintained.
I'm glad you bring that up, because with the return of COVID, everything now again seems to be a big question mark. Do you feel like local demand could potentially slow down in the next 3 to 6 months? And of course, you did say your order book is looking very solid, but of course, preempting what may or may not happen, is there any possibility that we could see local demand slowing down? That, of course, is one part of the question. The second being, if that is to happen, how strong is the export market right now for you? Will that be able to support or cushion the decline that we could potentially see in the local market?
Yes, you are right. This is area of concern for everybody. But this time, it is not the federal government or the central government who is taking the decision. So decisions are being taken by the state governments. And fortunately for the country, in the southern states, this pandemic is, the overall spread is less. Barring NCR in Delhi and also in Maharashtra and some part of Bhopal, Lucknow, the overall COVID wave is very strong. But rest of the country, it is still very mild or it is negligible, especially like in the Odisha and Bengal, Jharkhand, Chhattisgarh, Madhya Pradesh, part of Madhya Pradesh. So these are very safe areas. Similarly, if you see the Tamil Nadu and Kerala and also Karnataka, they are also very safe. So I think more than 70% of the country will be working very well. Last year, it was a complete lockdown for the whole country. That was a great issue. But this year, I think such kind of very hard lockdown will not be there. And the domestic demand will continue. Now, the point here is for the exports. In case there is some ripples or some slowdown in demand as far as the domestic market is concerned, then we have good order book for exports. And exports are doing extremely well. Today, the difference in between export prices and domestic prices is nearly $200 a ton. That means export prices, we are getting better price in export than the domestic market. But looking to our long-term customers, we are maintaining the reasonably affordable prices for our customers in India, whereas the customers in Europe, in America, Latin America, Brazil, and Southeast Asia, all these customers are ready to pay much more. So I'm sure in case there is some problem, then we can definitely switch over to the export markets as we did last year, and there won't be any shortage of order book, and there won't be any cutting down of production.
Mr. Sharma, what does your order book currently stand at, and how much of it is domestic and how much of it is international? So if you can just give me the breakdown of that, that would be useful for me to understand the sort of outlook you're working with.
45% of the total order book is exports and 55% is domestic. And we can switch it over to 55-45 anytime. So, and then finally, in case the lockdown persists and this pandemic wave goes much beyond our imagination, then we can even go to 75 to 80% of exports. Last year, in April, May, June, we did about 85% of exports. And July, August, September, we did about 70% of the exports. So these are very, very, very nice signs. So I'm sure we'll be in a position to switch over to exports in case there is a problem in the country.
Right. Of course, while we're all heartbroken and depressed about the COVID situation, this might actually not dent earnings for JSPL, because they have the potential to increase the export business, which of course is at better margins. Anyway, talk to me about utilization, sir. Those have stood at 100% or close to 100%. Any sort of capex plans you're working with? Any sort of utilization that you're looking to add in the near term in order to, of course, boost your top line?
You see, we have taken a target of 15-15-50. What is 15-50-50? I'll explain you a little elaborately. So 15,000 crore of total debt level, 15,000 crore of overall EBITDA per year, and 50,000 crore sales turnover. So this year our target is 15-15-50. I'm sure we'll be in a position to achieve it by the end of March 2022. And as far as the overall scenario is concerned, if you see in the country and you see in overseas market, steel is very strong today. The whole world, they have taken a very good decision that they have given the stimulus packages to increase and to enhance spending on projects, and that's the reason the steel and metals they have gone up. In my estimation, it is about $17 trillion which are going to be spent in next 2 years' time. So such a huge spending in 2 years, or even 2.5 years or 3 years, is a huge spending. So the money has to be spent by people, and be it America, be it Canada, be it Europe, Australia, China, India, Middle East, everywhere each government has opened the vault, and they want to spend money so that whatever last year the economical crisis took place, or whatever the people, they have lost the money, so they must recover. So this is going to happen, and this will definitely keep the steel business up and up in next 1.5 year time. The problems what is persisting today in India, we are seeing that oxygen gas availability is an issue, and many more people they are suffering because of non-availability of gas, or sometimes there are no beds available in the hospital. I'm sure Government of India is working on this. Mr. Modi, our Honorable Prime Minister, is a disaster manager. So whenever there is disaster, so he comes out with a pakka permanent solution. And this is what he has shown during the Galwan Valley fight. And this is what he has shown all 5-6 months of the in Ladakh. And this is what he has shown during the last lockdown. And I'm sure this is what he is showing now. So I admire him for his ableness and his capabilities to steer the country during very, very serious, disastrous moment. So nothing to worry about. I'm sure it will come out.
Mr. Sharma, I think the world admires you because you've led by example by providing those oxygen cylinders when needed most from your Angul facility. So well done to that. I think beyond the stock, I think general population as well is very grateful for you to do that and, take lead in that. But coming back to business, right? You said that demand, of course, is picking up. You're right. There's been so much of economic boosters coming in, maybe short term, maybe for the immediate run, which of course is going to lead to inflation. We're already seeing a commodity inflation robust in countries from where it started from, like in China. Where are you seeing prices in the near to medium term, and also raw material prices? I mean, look at the way iron ore is going, right? I'm assuming that is going to be impacting your sort of profitability margins, realizations from a 3 to 6 month period of time.
You see, I'll tell you one thing. The steel industry or any metal industry, we always work with a time lag of about 2 to 3 months time. So today, whatever the steel prices are based on the iron ore prices, scrap prices, HBI, DRI, pig iron prices of last 3 months. So, but this is a business like this. So whether it is price going up or going down, so we always consider that 2 to 3 months time will definitely take to make the corrections. So we have seen that in last 7 months, these input costs have gone up by $200 a ton. That is about 15,000 rupees a ton, and so are the finished goods prices have gone up. But over and above, the what do you call short-term customers or the spot customers are many. So whenever in market there are spot customers, spot buyers, then the manufacturers they definitely have a better time. And long-term customers we have about 70% long-term customers and 30% of the short-term or on-spot customers. So they pay a very good price, and finally, whatever, like for example, I gave an example of $200. Yeah, $200 increase in the input costs. But for the spot buyers, I mean, they are ready to pay $300, even $350 a ton. So this is a huge money.
Right, and you talked about these long customers, right? Do you have when would these contracts go in for negotiation? Are they sort of fixed for a foreseeable future? Is it maybe longer than the medium term? Where does that price fixing mechanism stand, and when would it be up for renegotiating again? So I'm assuming then the price difference between spot and long becomes closer.
Yeah, so normally we go for 3 months quarterly prices. So the quarterly prices are in such a fashion that neither we increase nor we decrease, and especially for the MSMEs, we take utmost care that because they are dependent on the prices given to them by their major OEMs. So we always take care that they do not suffer because of steel price going up. So we secure them that yes, this is the 3 months prices, so that they can buy and they are rest assured that their prices will not go up, come what may. And in case the prices go down for MSMEs, we reduce the prices. So if it increases, then we don't increase. Whereas if the price reduction takes place in between, we definitely pass it on, either in the same quarter or in the next quarter. So this is what we are supporting the MSME sector, which is a large sector in the country, and they are the backbone of any economy. Now, coming back on the long-term customers. The long-term customers, basically the large OEM customers, large infrastructure industry, where we go for the quarterly prices, and they also maintain that. Then the third customers are the export customers. So the exports, we do not have the long-term price mechanism. So we always go with the formula based. So the formula based is based on coking coal prices, iron ore prices, and some of the other metallics indexes we do. So it is a combination sigma of many more factors, and the customers they also prefer that, and sellers also prefer that. This is a universally acceptable prices formula, and neither party suffers because the formula-based costing is there.
Right. So also, not to talk about this in too much detail, but I believe we've accepted a binding offer from World One to divest the stake in subsidiary Jindal Power. What is the timeline that you're looking to complete this? And I know you've talked about this in the past, where you want to reduce your carbon footprint by about 50-odd%. You're also looking at relieving a lot of debt. So just give me a sense of the timeline, and also what kind of debt proportion are we looking to sort of retire by this inflow?
You see, our aim is, as I told you, 15, 15, 50. This is our aim. Similarly, we have another aim, that is cut down the carbon footprint, CO2 footprint by 50%. So this is the reason we are working on this, that we have to divest the power business and let it go away from the steel business, so that we become one of the top 10 efficient steel industry in the world. And this is what our interest is. And I'm sure we'll be in a position to do it. We have, it is a very long chain, statutory compliances, statutory approvals from lenders of JPL, JSPL, and also from SEBI. So these are the areas which we have to work on. I think in next 2 to 3 months' time, we should be in a position to draw a direct line as to how many months more or how many weeks more going to take place. So give us 8 to 10 weeks, we'll decide.
Right, that's amazing too. But very lastly, sir, before I have to wrap this conversation up, you have an ambition of becoming the top 10 companies in India. Are we on track for that? And also, what sort of a growth? And I'm not asking for specific numbers because I know your earnings are around the corner, but just a broad spectrum to give us a sense of what sort of growth are we expecting this quarter?
You see, there are two things. I'll like to add one more thing. Top 10 companies in India across any product. This is one. The number two, top 10 steel companies in the world. So that is again a very big challenge and with a big target we have taken to become the top 10 efficient companies. May not be the largest companies, but efficient companies in terms of cost of production, cost of making steel, cost of power consumption, and the overall CO2 emission to the sky. So these are to the environment basically. So these are the factors where we calculate and we compute that we will be amongst the top 10 steel manufacturers in the world in terms of efficiency. Similarly, in India, on the ratio based, like debt to equity, debt to EBITDA, then overall debt to sales turnover. So all these things put together, we want to be top 10, one of the top 10 private sector organizations in the country. I'm not taking PSUs in this particular calculations. There are not many companies more than 50,000 crores of sales turnover having EBITDA and debt ratio 1:1 with 15,000 crore, that is $2 billion of EBITDA and $2 billion of overall debt, and with $6+ billion of sales turnover. There are not too many companies with such kind of good ratios. So we want to be in top 10 Indian companies in private sector in terms of ratios, in terms of efficiency, and top 10 steel manufacturer in the world in terms of cost of production as well as CO2 emission.
Well, that of course, I don't think any of your shareholders have any reason to complain. Very lastly, how much more upside are you expecting on steel prices in 2021?
You see, we are not working on the upside prices because prices are subjective always. Depends upon the raw material prices. We have our own margins and gross margins what we are working at. So the prices, if they go up, then of course the gross margin does not exponentially grow. And similarly, when the prices go down, so the gross margin does not come down in the same ratio or the proportionate. So the point here is, suppose we want to maintain more than 25% gross margin. So we'd like to maintain that 25% gross margin. The moment the prices go up or the prices go down, if we can maintain 25% gross margin, that's a very good margin.
Right, so solid growth, 7% return on your stock, reduce carbon footprint, lower your debt, and to be the top 10 private companies in India. Thank you so much, Mr. Sharma. I think we definitely had a blessing for JSPL and for the country. Thank you.
One more thing, last, and oxygen supplier to the needy.
Right. Thank you so much, Mr. Sharma. Such a pleasure to talk to you.